do have the number. It is 6.1%. There was some uncertainty as to whether indeed that was the number. It is, in fact, the number. 6.1% is how much the Indian economy grew by in the third quarter, against 6.9%. And the ET Now poll also had indicated a number of 6.1%. We just have to wait for the breakup of those numbers, where how much manufacturing grew by and the other components of the overall GDP number. But Janak, I'm going to bring it back to you. I'm sorry for having interrupted.
Yeah, so I think, in terms of the various component services, growth will remain reasonably healthy. Our expectations will remain reasonably healthy. I think key challenge is going to be on the manufacturing side and investments, and we have to see how those numbers pan out. And the biggest bottleneck for us, and the number itself is not going to come as too much of a surprise. I think the question is really on what is it that we are going to do to change, bring that 6.1 back to 7% plus, and that's really what focus is going to be as for the market is concerned.
Okay, that's 6.1%. No luck in terms of the internals, but we've got Robert Pryor-Wansford who also joins in. Robert, we've got in the Q3 GDP numbers, which is bang on with the ET Now poll at 6.1%. Would you say that you're a bit disappointed?
I am, yes. I thought it would be higher than that, and perhaps quite a bit higher than that. Obviously, as you say, we're still waiting the details. I presume, relative to what I was expecting anyway, services have disappointed. So let's wait and see. But I mean, clearly it's now, with that kind of number, unless there's been macro revisions, it's going to be hard to get the 6.9% preliminary estimate from the Statistics Office. And I think it does certainly increase further the chances of a repo rate cut from the RBI at the March 15th meeting.
Sure, Robert, I think Credit Suisse was working with a number of 6.8% for the third quarter. In light of the number that we have for the third quarter, would you rework your overall financial year estimate?
Well, as I say, it's too early to say yet because there may be revisions and so on and so forth. But clearly, the risks to that to our number of 7% for the fiscal year are, undoubtedly on the downside. What I would say is that there are bits and pieces out there which suggest that this may well be the bottom of the economic cycle. In particular, we've seen quite a strong improvement in both the manufacturing purchasing managers index and the service sector equivalent. And they don't have a perfect relationship with output growth, but they're not bad. We've also seen, I think, signs that the industrial cycle itself is perhaps close to bottoming out. If we look at sequential industrial production growth as opposed to year on year and season adjusted, that has picked up, quite nicely over the last few months. So let's not despair. But I do think the recovery is going to be modest. I do look for a series of rate cuts from the RBI. At the moment, we have 175 basis points of reductions.
All right, Robert, thanks very much for coming on the phone line and talking to us about your view, really, of that 6.1% number that we've had for the third quarter. We've also got some components of the GDP number. Farm output has come in at 2.7% against 3.2% in the previous period. This is against our estimate of 2.5%. The manufacturing sector continues to disappoint, and it's come in at a growth of just 0.4% against a 2.7% earlier. So that's a big disappointment. Mining has fallen 3.1% again. This is against a 2.9% drop in the first quarter. So this is pretty much in line with expectations. Construction growth has come in at 7.2%. So that's surprised on the upside. This is against a number of 4.3% in the second quarter.